Welcome back to Talk Property to Me. I'm Aaron Downey.
My name is Brad East, and today we're going to be running through, state by state and looking at what the predicted growth areas or high growth areas are in each of these states in the sub-800K markets. So basically, as an example, we'll go look at New South Wales, what in that area or in that state, sub-800K is predicted to perform well over the next 10 years. I guess as a bit of a disclaimer, this data is put together by a bit of an algorithm in a system. You know, nothing is crystal ball sort of stuff, but what it looks at is, some historical data mixed with infrastructure, predicted infrastructure spending. What was the other one? There was a few more.
Yeah, both the supply and demand metrics.
Yep.
So, you've got your building approvals, you've got your hold times, you've got your vacancy rates, inventory rates, all of that stuff, your infrastructure spend in the area, the quality of schools, socioeconomic factors.
Yeah.
And then you've got, of course, the difference between the demand for rentals to sales. So like you said, it's an algorithm.
Yeah, it's all data-based.
It's all numerical. There's nothing subjective about it.
I got one of those metrics. I never realised how important it was, the school one. Like literally I've just moved, or about to move from, closer to the Central Coast into Newcastle to where the office is. And we had shortlisted schools before we shortlisted where we want to live. Yeah.
We
literally were like, we need to be either in this school or that school.
Yeah.
And then when we were looking for houses, we then filtered that in Domain and realestate.com to get that area. So that is, in my opinion, now that I've actually done that, is a very important metric.
Well, I think that's really good. And I think we've done an episode on markets versus sub-markets, and that's where a lot of people go wrong. I think they don't take into consideration the different market segments and the people buying at different price points and where they're at their stage of life. Because, the quality of schools is one metric that you can't really track.
I always use Newcastle as an example, or Merriweather, where I've bought, bloody mouthful. There's two schools in that area, well, three schools technically, but you've got Merriweather School, which is right next to a huge housing commission block in Hamilton South. The quality score is a lot lower because of that. And then you've got Merriweather Heights, which has, I think it's zero in Merriweather Heights, has zero housing commission. Yeah. All of a sudden that quality scores through the roof, and so is the other one. So the houses that are closer to the Merriweather one, so on Henry Street, Macquarie Street, over that area, their capital growth over the last 10 years has been less than across the road, which is in the catchment for the better school. Yeah. It's mental, and that's actually break it down.
Socioeconomic area, that is actually tracked in this data.
So when you, when you, you listen to these podcasts, you're doing your education, you can't just go, yep, Brisbane is a good area.
Because of the Olympics.
What area, what street, exactly. If you want to really break it down, this is your job, Aaron. Yeah. This is literally what you do daily. This is why you have these tools. The average punter out there is just going to get a bit of an area and go, yeah, that's a good area.
Yeah. And I think, and all of these tools are accessible to people willing to pay for them because it's access to information. But at the end of the day, you've got to be able to interpret the information as well.
Sometimes information can be harmful. It really can.
Exactly.
If it's in the wrong hands, so to speak.
Now, I think aside from all of these metrics, I think based on what we've talking about for that street level data, there's a lot of good free information on microburbs for that stuff. And one of the biggest metrics I like to use microburbs for is the actual income compared to house value.
Yeah.
And you can see the affordability index for different areas and how that affects what people spend on the actual property.
Well, it's pretty simple. Areas with higher incomes are going to drive prices up. They can afford more.
Yeah.
And mortgage stress levels will be less in those areas. There's going to be less stress sales in that area when rates go up. Yeah. It's as simple as that.
Yeah.
But let's start moving through the states. Which one are you on now? What have you got?
So we're back. We're overall Australia here, but I think what's important to mention is we're just touching on houses at the moment. We're not going to discuss units. So cities aside, mostly Newcastle and Sydney won't be in this at all. We could probably track Newcastle and Sydney if we were talking about units. But just for houses,
it's mostly because of the 800K filter.
800K filter.
We might do another episode later where we just do overall. But for the purpose of this, it is filtered at 800. So Sydney and higher price areas will be filtered.
So I think starting off, one of the biggest one that filters for the overall capital growth rate moving forward is Streaky Bay. And this is a great example of where you actually have to be able to interpret the data and not just get access to this information and go and execute a purchase. So there's a low amount of sales, so maybe the data's slightly misled, but you're also buying in an area where vacancies are through the roof, and
just
your
looking
overall
at it now, it's looks like a little tourist town in South Australia.
Exactly.
It's Streaky Bay is a coastal town on the western side of the Eyre Peninsula. There you go. So it's nowhere near anything.
So an owner-occ purchase, probably going to do really well, buy a house, move, and you're going to achieve good capital growth. But if you're an investor, you've got to take into consideration the other side with actually leasing the place and what your weekly return's going to be. But one of the top ones here that shows up for both growth historically, future growth, and still a market for both buyers and renters is the Barossa Valley.
And I think most people know where that is.
So there's great sales across the board. It's performed really well over the last 10 years and probably even more so over the past 30 years. It's achieved a really stable and consistent rental increase. So
I guess it's just one of those little micro cities outside of the major city, isn't it? I think it's from memory about 45 minutes or an hour. Out of
similar to the Hunter Valley to Newcastle.
Exactly. About an hour or so. Affordable prices. Good growth. So that could be a bit of a hotspot.
And look, the typical price, and this is typical price, this isn't medians, they're trading at 600,000.
So that's a good investment. It's a entry level.
It's a really affordable market. And I think, when we're talking about 600,000 price points, typically you're talking about units, especially in the east coast of Australia. So the fact that you can enter a really stable and strong market for houses at 600K, I think that's a market that a lot of people will be jumping on moving forward. Should we filter for New South Wales, or should we?
Go New South Wales next. So again, it's going to filter out a lot of the higher priced areas because of the 800K. And because of some of the metrics, it will throw in, I guess, like we were looking at it earlier, the algorithm does sort of throw in some bogey sort of places where you wouldn't invest.
So that, Broken Hill is a suburb that comes up, and again, that's being able to interpret the information and know why it's suggesting it. And like we were discussing, it's going to be a market that overall you might not lose money in because it also tracks your risk in this as well. So you might not lose money in terms of your actual outgoing investment in terms of return, but that's purely made up by the rental return that you're going to get in that market, not by the capital growth. When we're talking overall, one of the biggest suburbs that comes up is Maitland.
So that's, again, 40 minutes out of Newcastle?
Depending on the point. Half an hour out of Newcastle.
But it's the affordability.
It's affordability. Houses for 730,000.
When you look in, what's the average in Newcastle? Be 1 point something.
Especially in the inner city suburbs. But again, 50% increase in rental prices in Maitland over the past 10 years, and overall really good metrics for your hold periods, your inventory, your stock on market, your vacancy rates are super low at 1%. That's the population's 90,000 people compared to 40,000 dwellings. So you've got that natural scarcity component. And the affordability index is actually down at 30%. So there's a lot of leeway in there in terms of actual borrowing capacity.
So quite a good one. So in South Australia, we had Barossa Valley. New South Wales recommendation, I guess, would be based on that list, based on this algorithm, is the Maitland area in New South Wales. What's next? We'll go Queensland.
Queensland. Greater Brisbane or rest of Queensland?
I don't know. Probably, yeah, Greater Brisbane.
Brizzy.
Yeah, Greater Brisbane. I think with the Olympics and everything, there's going to be a lot of growth in that area.
Yeah. So we've actually got two areas, very, very similar, but one stands out in terms of the actual population to dwellings in the area, which is Ipswich.
Yep. Quite close to, I believe, a RAF base out there, isn't it?
Correct.
Ipswich.
Yeah. And if we actually go in, further, we can actually track the exact markets where we should be buying in that area. So we won't just mention the city itself being Ipswich. We'll go, into the more specifics with the sub-markets. And we're looking at Barellan Point.
Barellan Point. I don't even know where the hell that is.
But again, I haven't filtered any of a certain price point. So Barellan Point looks like a potential own-rock market, trading at a typical price point of $1 million.
Yeah. Yeah, Barellan Point. Sort of northeast of Ipswich.
Okay.
Yeah. So, yeah, probably about 10 Ks north of Redbank Plains, Springfield, that sort of area there.
Yeah.
So a little bit closer to the city. Then I guess the southern parts of Ipswich.
Yeah.
So that could be an area to look out for the next 10 years.
Yeah. And again, that $1 million price point, and based on the fact that we're only taking into consideration the growth to come.
And say sub-800 sort of areas as well.
Yeah.
But they're, looking at a map now, that area's looking like it's about 20 Ks out of Brisbane CBD.
Yeah.
So it's
still
it's not going to do bad.
Yeah.
It's not going to do bad over the next 20 years, 10 years.
I think this is a good one based on the fact that Melbourne, compared to the rest of the states or the rest of the cities around Australia, has performed not very well over the last 12 months.
Yeah.
But we'll touch on Victoria now, and there's a few very similar price points varying from 680,000 to 800. But we're looking at areas like Brimbank and Melton. Melton.
So what are they regional areas?
That's Greater Melbourne.
Okay, here we go. So looks like it's near Bacchus Marsh, if you know where that is. So that looks like it's about, Melton looks like it's about maybe 30K, 40K out of Melbourne CBD.
Yeah.
So that would be sort of northwest area by looking at that. Any others in that area?
There were. I've actually moved out of the Melbourne metro area and gone to regional Victoria.
Yep.
We'll touch on some regionals here. So Indigo first comes up, but it's only got one sale, so lacking the data there to actually support the information. But
one sale per annum.
Horsham at $456,000 price point.
Horsham. So that is very rural.
It's very rural. It's almost
out past the
South
Grampians.
Australia.
Yeah, it is. It's past the Grampians National Park. Again, I'd always be cautious in going very rural, although this algorithm is punching out that it's thinks that it might be a high growth area. Some of the risks involved with just trusting the data
Exactly.
and not trusting a bit of intuition, I guess, and previous knowledge. If you had to weigh up between those two options, Horsham and Melton, you go on Melton every day.
Yeah, exactly. And that's why, people always talk about location. It's
Sub-locations as well.
yeah, exactly.
So what do we got left? WA, your favourite.
WA, both everyone's favourite at the moment.
It's everyone's. It's I guess it is one of those markets, isn't it? It's so hot at the moment because it is on a massive rebound. But
Yeah.
how far is it going to rebound before it bounces back the other way again?
Yeah.
We've discussed it previously, but very reliant on, I guess, a single industry.
Yeah. And that's the thing, when you're investing in Perth, you've got to buy in those markets, which is, reliant on that local economy.
Yeah.
So Cockburn is coming up as actually overall capital growth, cash flow, and in terms of the risk profile as well. There's a lot of data there to track.
All right, Cockburn. So that looks like it is.
Looks like it's
Fremantle,
about
is it?
10, 15 minutes south of Perth.
Yep, Coogee Beach. So it is quite. Looking at it, looks like it's quite close to the beach.
Yeah.
It's only about 10K from the city.
And then all of the suburbs within that Cockburn location, you sort of at around price points from 680 to 800K.
Yep. So it is very affordable. Long-term growth might be questionable, but it's not something that you can really predict to a T, is it? You just look at some of those, I guess, the previous data, and it worries me a little bit, that area. But
and again, like in terms of an investment, if you're looking at for a property to live in, well, then that's your own consideration that you need to think of. But in terms of an actual investment property, we're purely looking at this from a capital growth perspective, and then you're looking at sales data mostly. So you've actually got to, look at it on the flip side in terms of the actual investment and being like, well, who's going to be living in the property? What's your tenants, which is that factor of, the schools and the socioeconomic score in the area, but also incomes, that's going to affect what people pay for their rent as well.
100%. So yeah, look, I think just looking at some of the, I guess, the map in the Perth area, a lot of those coastal towns, is it Joondalup? There's a few that sort of pop up on that list as well.
Yeah.
And they all just seem to be, I guess, because the affordability in that strip through there, people are going to want to naturally be close to the beach.
And that's the thing. It's that, it's those lifestyle amenities as well. You're just outside of Perth CBD.
You're on
it's
the
in
beach.
A coastal location. So, that's the thing with those markets where you might not be solely relying on that single industry because it's an area that people actually want to live.
Yeah. What's left? We got ACT and
ACT.
Do people go there?
I forgot about that.
Politicians. Where are the politicians investing? So again,
it's saying that you can't buy a house in ACT sub-800.
Well, there you go.
There you go.
Don't invest in ACT if you've only got 800K. So what's that? Northern Territory?
Canberra.
So just in the city.
Yeah.
What about Northern Territory?
Darwin or rest of NT?
Probably just Darwin.
Darwin. So it's just saying Darwin, but we'll go into it. Or Palmerston.
Palmerston.
Yeah, there's very little data on most of them, apart from this one.
Zuccoli.
Zuccoli.
That's a pretty cool name, actually.
So 600K.
Guess it's one of those things. There's not enough really data in that area, is there? And
But
again,
it's not, but it's straight away like days on market sitting in 150 days. If you're an investor and you're trying to offload a property and it takes you 150 days to sell,
yeah, it's not looking real good.
no. So
You'll end up doing some vendor discounting on that for sure to sell. So that pretty much wraps up, I guess, the states. As I said at the start, these are just areas that are based on an algorithm.
Yeah.
If you are looking to invest, you need to then break down that area again, not just to the suburb, but to the street, to the house.
yeah, exactly.
Don't just go on realestate.com and go, oh, that looks like it's mildly within the area that could do well.
Yeah.
It needs to then be, all right, what street, what house?
Yeah.
You're just going on realestate.com, not going and look at these properties.
Yeah.
What if there's a crack den next door? What if
Yeah.
there's, burnt out cars up the street? All these things that you won't see unless you go there.
Yeah.
I can't stress that enough. Go and have a look at it. Or if you don't have time to do it, pay a buyer's agent to do it for you.
And that's the thing, like, if you don't want to spend the money and do the research in doing that, just focus on that location piece.
Yeah.
Buy in the cities and, in an area that people want to be in, and most likely you're going to do well. But it's those investors, and like we saw last time, I think last time on the podcast, we spoke about the different growth rates for areas. And we saw the difference between areas.
And they were most of those really high growth areas over the last 10 years were lifestyle locations, like Kingscliff, Northern New South Wales, Noosa Heads, I think it was.
Yeah.
All those lifestyle areas were doing really well long term. And I don't think that's going to change. When you look at Perth, we just looked at Perth, all those lifestyle areas along that coast there are doing really well.
Yeah.
It's simple, isn't it, when you really break it down like that?
Yeah.
Invest where people want to invest. Yeah. Well, people want to live themselves.
Where people want to live. It's where they want to live themselves, really, yeah.
Don't just buy this cheap stock that you can get an investment night or something like that because someone tells you can save X amount on your tax.
Yeah.
Don't fall into that trap. Do a bit of research, look at areas, look at the data and make some educated decisions.
Exactly.
But that's it for today. Thanks for jumping on. We'll see everyone on the next episode.
Yeah.